We can say that the last 4 years have been like the perfect masterclass to really understand risk management to the purest form, let's say. So spreading your decisions is one, also not getting paralyzed, and you continue to buy energy even when it gets really hard.
Merlijn, the energy market has gone through an unprecedented volatile ride in the past few years. And what has fundamentally changed if you compare where we are today in European energy markets compared to where we were before 2022?
If you look at the graph of the energy prices over the last 10 years, you just see basically a flat line until 2019, then a drop because of COVID, and then just a huge peak because of all the things that we've seen since then. So of course, the main reason for that huge peak has been the conflict between Ukraine and Russia. And through that conflict, the huge dependence of Europe on Russia has become very apparent. And yeah, of course, the main thing that we've been trying to do since then is to build down that dependence and to diversify our supply of natural gas, and at the same time try to diverge from natural gas to renewable energy sources.
How do you navigate such volatility when you are, let's say, an industrial that needs to procure important volumes?
We can say that the last 4 years have been like the perfect masterclass to really understand risk management to the purest form, let's say. So spreading your decisions is one, also not getting paralyzed, and you continue to buy energy even when it gets really hard. So for example, at the start of this huge peak, we were seeing prices of 35-40 euros per megawatt hour, which was unprecedented. Some people stopped buying altogether because they said it's not sustainable. But then not too long after, we saw 200 euros per megawatt hour. So clearly that was a wrong decision to just stop buying and just assume that there's a ceiling to prices, because there isn't.
Some voices said that during those moments of extreme volatility, the market was dysfunctional. I would say we don't agree with that, because if markets are at such high prices, what the market is basically saying is consume less. Is there, from a policy point of view, intervention needed to make that market work?
If you take away the price incentive to consume less, for example, if you see that for residential users, you fix the price and you don't expose them to these very high energy prices, then people will not be turning down their heating. And then you don't see that reduction in consumption that could also then finally bring back prices down again. So what you really want to see in the market is those price incentives, also on the industrial level, to consume less where possible.
The level of penetration of renewables into the power grid is increasing as we are building more, mainly solar farms, wind farms. Do you see a correlation between more renewables and more short-term volatility in the market?
There we see more volatility based on every reforecast that you see on the weather. Just creates huge jumps in energy prices. But also the longer term forwards, what we see there, for example, is that the peak load and base load futures have been growing towards each other. And in some countries now, you actually pay less to consume during peak hours than base load hours. And that's because of the huge amount of solar capacity that has been integrated in the market over the last few years. Also, what you see there is that we have to think more about the effects on this new generation capacity on energy prices. Also, for example, when signing a PPA, we do the careful analysis of how that production profile of that PPA will also impact your residual load that you need. And so basically what it means is that it gets harder to completely cover your complete energy risk, let's say, or your price risk. The products that are currently offered on the market, they only offer base load products or peak load products. But clearly the production the actual production of your solar or wind generation plant is very variable because of its intermittency, and therefore it's very hard to cover those risks. And what we try to do is then to assess that, but also we're looking at maybe new products being offered in the market soon to maybe answer to that.
As an industrial buyer, when you need to buy power and gas for the production of the goods that you produce in your company, you're just faced with ever more complexity in that market that goes more granular, more price risk on short terms. So it basically comes down to being very successful in hedging, let's say, your baseload consumption on forward markets, and then trying to optimize your flexibility, maybe storage on site to cover that price risk on the short term. Is that correct?
Yeah, that's correct. So you have to be very intelligent about the choices that you make, both buying wise, but also investment wise. So you might want to consider installing a battery on your site, but as well, like if you maybe are considering either wind or solar to integrate that in your portfolio, you have to make a smart decision, look at your consumption profile and see which one of those assets would fit your consumption most. So it's about making intelligent choices and taking everything into account. So there's no two aspects of energy buying anymore. It's one single aspect to be considered, and it's the PPAs as well, or greening of your energy. It should all be considered within the context of risk management in the end as well.
But then finally, what about selling? You sometimes hear stories about very spectacular sales of positions in a very volatile market that bring in huge benefits. Did you see that happen as well?
We saw that happen, but of course, I mean, when we look at selling, we also want to look at it in an intelligent way. So our main thing to go back to is always risk management. Of course, we don't want to be cowboys in the market and selling off just hoping to make a profit. No, we always look at it from a risk management point of view. Sometimes for a market risk client, so that basically means clients that are really dependent on the final price that you see on the market. For them, it's sometimes a necessity to sell back some volumes that they maybe hedged at too high prices. If you then see a drop in energy prices, it's a good idea for them to unfix some of that volume, not to be too far away from that average market price. So it's always again linked to the strategy, but as well sometimes it's also linked to taking some opportunity, because selling allows you to take advantage of that downward trend. So why not? In the end, it's a decision that is equally worth as buying, let's say.